Excel accounting practice problem. Bank reconciliation, month 2, part 2. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's 2 tabs down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In prior presentations, we put together the bank reconciliation for month 1, now continuing to work on month 2. We started out with the process similar to what you might see in accounting software, such as a Quickbooks, to identify the differences between what is on our books and what is on the bank's books. In essence, doing that by taking the general ledger activity for the current month, that being February, as well as the outstanding items, the items that hadn't cleared the bank by the cutoff of the prior time period, in our case, January 31st, those being these items from our prior bank reconciliation. And then we basically tick and tide and try to mirror the items from the bank statement to what we have, the starting point being the 61,242, that matching the bank statement. And then we have the increases of the 51,981, that matches the activity on the bank statement. And then the decreases here at the 11,113, not quite matching what's on the bank statement. The difference then is going to be that 520 because my ending balance is at 102,110. Bank ending balance 101,590. So now we got to reconcile for those last couple items that make up that 510. That's going to be these 2 items down below, the 500 withdrawal and the bank service charges. And we're also going to put this in a format of a bank reconciliation, starting out with something that you might see in like a book type of problem, and then we'll solve or adjust for the book balance side of things. So that's where we stand now. We're going to go back to the practice tab. I'm going to go all the way to the right to where we're working at. So we'll go all the way over to the right, and we're looking at our bank reconciliations. So I'm going to create our worksheet. So we'll create our worksheet over here. I'm going to make a skinny. We'll make a skinny column, and this will be the actual bank reconciliation we're going to be creating. We got the book balance. Now notice in accounting software, you often won't see this side, the book balance side of things, because the book balance will be adjusted for. We're going to correct the book balance. And so therefore, once it's corrected, the book balance will kind of go away, that side of the bank rec. So the book balance is going to be equal to our ending balance on the check register, or what's on the balance sheet, or the trial balance, the 95,779. And then we'll have the bank balance. Let's make a skinny column here. Then we've got the bank balance, and making this column a little bit wider so we could see this stuff. Now, the things that are on the bank statement that aren't on our books, the 500 and the 20, those are kind of our problem. Those are things that we have to fix on our side. We will do that with the transactions, but for now, let's put that into the left-hand side to make an adjustment to our side of the books. So we're going to call this checks and decreases, checks and decreases, colon, and this is going to be a withdrawal and service charges. I'll make this one a little bit larger here, and that's going to be for the amount of, it was 520, so 520. I'll do an indentation here, and that's going to be the total checks and decreases. Making this a little bit larger again. Let's indent twice here, and this then is going to be the sum of those. Let's bring that down a little bit just in case we have some other items. Let's give it a little space, give it a little room here. No need to crowd things. We got plenty of space. Let's make this one a little larger too. Okay, then let's sum this up. There we have it. And then I'm going to put the adjusted balance again. I'm going to give it a little space because I think the other side is going to be a bit longer. And we're going to call this the adjusted book balance, which is going to be equal to the starting book balance minus these decreases that we're going to have to put into place because they're on the bank statement and we think the bank is correct. So we got to put them in our system to make our side correct. So then on the bank side of things, we've got the bank side where they said the ending balance for them was the 101,590. So 101,590. And then we're going to call it outstanding checks, let's say, and decreases. So we're going to say, let's make this one way larger so we could fit that stuff in there. And then let's put a colon at the end of it too. And I'm gonna format these for a date format. So I'm gonna pick up the formatting over here and put the date formatting there. And I'd like to pick this information up from the items that we did not check off over here on the outstanding items from last month that we still didn't clear. So we wrote those in January, and then the things that we wrote in February that haven't been checked off. To do that, let's hide some cells so we could see this on the side by side a little bit more easily. So we can make this as easy as possible. So we're going to right click and hide some cells. So now we got the side by side, and we're just going to pick up all the non-greenified stuff, because the greenified stuff is the stuff we checked off in theory. So we're going to say then we've got the 500 up top that needs to be picked up, and that's going to be the 500. And then we've got the checks. These are outstanding checks. So we're looking for this one for the 228. I'm going to flip the sign now by putting negative of that 1359. And then I'm going to say I'm looking at the decreases over here. So 228 negative of the 360. And then that yellow one is also one that's not green. So anything that's not green. That was that funny one that we had to split because it was the sales tax going to the state and to the, you remember, I don't need to go over it again. So we're going to go to the 228 negative of the 3549. And we have more, don't we? Yeah, we got 3 more. This is going to be this is going to be equal the 228 negative of the 6 or the 866, and then equals the 228 and negative of the 83. And then I'm going to copy this down a couple more. There's like 2 more, I think, copying it down. So then we've got the negative of the 150. Now these 150 and the 15 are kind of tricky ones. I'm not going to pick those up because those are the ones that were in there as of 131, and they did clear in the prior period. We put them in our reconciliation down here because our ordering needed to be basically in order of the date order, but we had to put the last period. So these are actually cleared. I'm going to make them green. They cleared in January. So I'm going to make them green. So there we have it. So then I can delete these cells. So there are those. And let's call this, I'm going to leave a little bit of space again and call this, let's say, total outstanding checks and decreases, and then make this a little bit larger and do some indentation here. We'll indent it a bit. Summing that up equals the SUM. We'll pick up the sum of those items. So I think that looks good. And then we're going to go to the outstanding deposits. Outstanding deposits. These are deposits that are outstanding in nature. So let's make this format the cells down here for date formatting. And so we don't have any outstanding deposits from the prior bank rec that still hasn't cleared this time, which is typically the case because we would expect our deposits to have cleared. The only thing that hasn't cleared would be some check like this one, for example, that someone just didn't cash, or for whatever reason you would expect that would be the norm. So we're going to pick up these deposits that have not yet cleared, and we expect them to clear in March, which we can check, but we're going to pick these up. These are the reconciling items. And the amount then is going to be for 200, and for the 2060, I'll leave a little bit of space here, and this is going to be called the total outstanding deposits. Summing that up equals the SUM, making an indentation, alignment, and indent. And then we're going to leave a little bit of space, and we'll call this the adjusted bank balance, which is going to be equal to the beginning balance minus the decreases, and then plus the deposits. We get to the 95,259. Does that match what I had on my book side? I got to unhide some cells to find out. We're going to do the big reveal here. We're going to HV to IE, HV to IE. Right click and then unhide that stuff. And then we'll scroll on over and see, does it match? It does. Now this one, I'm going to pull this one all the way down. So we got a side by side here. So at the end, I could probably clean this up and delete some of these extra cells, which might be good, but let's leave it for now. We're going to call this the difference, and this would be our check figure if there were a difference. So it looks like we're reconciling. Could be off by some pennies here, but we're rounding, so we're going to keep it at that. So that looks pretty good. This is our bank reconciliation. Let's do some formatting. Let's take this whole thing, and we're going to say, let's make this blue and bordered, border blue. In our more colors, in the standard, we want that blue. The Excel is fun guy blue. So there we have it. So now what we're going to do next time is a solve for this side. So remember that if you were to do this in accounting software, what would happen is the process of reconciling would be doing this process, us going through, in essence, checking everything off to what is on the bank statement, checking everything off that could be available at that point in time, which wouldn't include the items that cleared last time, but would include the items that had not yet cleared last time and were still outstanding, as well as the current items in the current period of February. And then we would basically reconstruct from that the bank reconciliation, or the bank statement. We would in essence reconstruct the bank statement, and the purpose of doing that isn't to reconstruct the bank statement, but to find the items that do not match. And when they do not match, then we would let the QuickBooks software say, okay, please reconcile it now, and it would then generate a bank reconciliation, which would be more like the report we did to the right. But in its software, we couldn't do that yet because we're not reconciled. So if we reconciled this way, it would do a force adjusting entry to reconcile, because we're still out of balance by that 521. That 521 is, of course, the items on the bank statement that are not on our books that we're going to have to add to our books. So in a software setup, we would have to add those to our books and then reconcile, then the software creating our bank statement. In a book problem, oftentimes you won't do this side of things, and they'll just tell you what the differences are, which is a little confusing, a little deceiving, because you're not really doing the full, you're kind of seeing halfway through the process. It's like, well, how would I know what those differences are? You'd have to take and tie off the whole thing in order to figure those out. And then on a book problem, you would typically have two sides to the bank reconciliation, and you would then be looking at the book side and the bank side, and you would be figuring out which side had the problem on it, the book side or the bank side. If something's on the bank statement and not on our books, then most likely we have the problem, unless the bank made an error, which is rare. So that means that we would say it's on our side. We have to adjust our balance because the bank is correct. If it's on our books but not on the bank, then it's possible we made an error, it's a wrong entry, or it's possible that it's an outstanding item. That's what we would expect. Outstanding checks, outstanding deposits, just temporary differences that would be on this side of the things, adjusting the bank, because the bank is incorrect, not due to them making an error, but due to the fact they don't have the information yet. We do have the information, so we're going to adjust the bank balance to do the reconciliation. Then what we will do is we're going to fix the book side of things, because this is our problem. This is us not being correct. This is us not having the information that the bank had. And so we're going to put that information into our books. Once we do, this side will basically disappear. The book balance will be adjusted to be whatever it's going to be after those two adjustments. And then this will all be all that remains from what a bank bank reconciliation is, which is taking the bank balance, the outstanding checks and deposits typically being all there is, and then having the adjusted book balance being the bottom line, tying out to the balance sheet and the general ledger after we have made the adjustments. So that's what we'll do next time.